Hey, Good Success community, Josh Culler here, host of the Good Success podcast. Thank you so much for joining us on this episode. But before we get into this awesome episode of the Good Success podcast, we'd like to take a quick minute and thank our sponsors. And first is Sharper Business Solutions and our good friend Gary Harper. And listen, your business is a personal endeavor that you have poured your blood, sweat, and tears into. Sharper Business Solutions is a full-service solution to help you scale your dream. Sharper Business Solutions implements the Sharper process and other key systems, giving you the confidence and freedom to keep growing and scaling as a company. The Sharper team wants to come alongside you and provide the resources needed for long-term growth and success. Schedule your free consultation today at sharperprocess.com. And let me tell you, these guys are amazing. A lot of our Mastermind members have hired Gary and the Sharper team to come and implement EOS and processes and systems into their business, and their scaling is very, very much apparent, and they've grown exponentially. So make sure you guys check them out one more time. That's sharperprocess.com. And we'd like to say a quick thank you to Veterans Path Up and our good friend Ken Lacey. And Veterans Path Up's mission is to provide affordable, stable housing to veterans and veteran families through the use of shared living, single-family residences, and ultimately a path to home ownership. Their emphasis is to provide housing for homeless, working, and disabled veterans, many of whom do not qualify for long-term support from any government agency. Veterans Path Up ascribes to the philosophy of helping those with a hand up as opposed to a hand out. Veterans Path Up provides a critical link to the veteran by bridging the gap to other supportive veteran services. This is accomplished through education and awareness to available support, with the ultimate goal of getting the veteran and family on a path to self-sufficiency. Through the use of private and philanthropic funding, Veterans Path Up acquires, rehabs, and places veterans into the appropriate housing for where they are with respect to their current financial picture. Improving neighborhood housing and showing veterans a path up strengthens the community and strengthens the country while helping those who have protected our freedom. You can visit veteranspathup.org to make a donation or find out how you can help impact our veterans even further. So without further ado, let's take a quick sneak peek of what you'll hear on this episode of the Good Success podcast.
No success is going to compensate for failure in the home. So it doesn't really matter what successes you have in business or you have, if your personal life's jacked up, if you don't have a great relationship with your kids or your spouse or whatever means something to you, whatever that is, it's really not worth it.
Welcome back to the Good Success podcast. I'm your host, Josh Culler. Got Tom Olson, president of Good Success, sitting right next to me. And man, it's a nice day out. It's bright
nice.
And sunny.
It's probably not as nice as some places of the country, but compared to yesterday, we'll take it.
Yeah, yesterday
rainy.
was gloomy, but today is bright and sunny.
But I found out from one of my leaders in my company that they prayed for rain yesterday. So hey, and it was purposeful because it kind of helped us with something else. So it was good. Sometimes rain is good, I guess.
Well, they know that you don't like rain. So.
I know, but it was good for an inspection.
Oh, okay.
Apparently.
That makes sense.
Know what that means, but
I guess that turns out good. So I'm excited about today's show. We have an awesome guest on the show who has an insane amount of content. He's been on like almost every stage that you guys can think of and been on several episodes of podcasts that we've actually been a part of. But we have Ryan Wright, fresh out of Salt Lake City, Utah, on the show today. Ryan, what's going on, my friend? How you doing?
I'm excited to be here. We have a clear day. We had rain yesterday as well. So,
well, good. We're excited to have you on the show. So just a little bit about Ryan. Ryan's been an investor since 2002, started with fix and flips and got into real estate investing early on. And he's been doing it ever since. And he has a really big story to share with you guys when we come back around to him. But he's also the founder of DoHardMoney.com. He created the Find, Fund, and Flip system, which I'm very interested to hear about. I read a little bit of a summary on the website, but we're going to have him go into that a little bit on the show here. And then he's also got, like I said, a lot of content out there, and he's been guests on other podcasts. One of them is with Victor Minash, that Real Estate Espresso podcast that he's been on, and so we've had Victor on our show. We've been on his, so
great guy.
Good friend of ours. So we're excited to have him on the show. We're gonna have him talk a lot about this stuff that he's doing. So, but before we get into it, if you haven't already, make sure you subscribe to the Good Success Podcast. We're on all the podcast platforms, or just to make it easier, just go to either the Apple App Store or the Google Play Store and download the official Good Success app. So all you gotta do is go to the App Store, search Good Success, you'll see our logo on there, and you'll be good to go. So it's super easy to listen to them there. You get all the episodes. You don't even have to open up Apple Podcasts or Spotify or Stitcher. Just open up the Good Success app. So it's official and it's awesome. So make sure you do that. And then the Good Success Mastermind, Good Success Mastermind, or goodsuccess.com/mastermind is where you can learn more about it. The next event is May 14 through 18, coming in hot. Man, it is very close, and it's in Miami, Florida. Speaking of hot, but we're excited about it. It's going to be an awesome event. So make sure you go to goodsuccess.com/mastermind, fill out the application there, and then you'll get on a phone call with Tom. So Tom, give us a summary of the mastermind. What's going to be going down?
I was just kind of give a little quick thing on these podcasts, but in the middle day, so it's 14, 15, and 16 for Group 1, and then Group 2 will come in on 16th and kind of all meet together with Group 1, and we kind of have a full fun day. One of those panels that we're creating, and actually I talked to Alex, one of our mastermind members, yesterday about this, and we kind of have a whole list of questions, and we're going to have probably the 5 or 6 best acquisitions people in the mastermind. So one guy is acquiring 300 homes a year. Yeah. So think about that. Like if you want to learn from somebody, do you want to learn from somebody doing 1 or 2 deals a year? A lot of the gurus out there, this is the secret, guys. A lot of the gurus out there that are teaching about how to do education and how to do real estate are doing like 5 deals a year. Seriously. Mm-hmm. And if those are $1 million deals, then great, like awesome. But most of them are not. They're making a lot more money on their education pieces than they are making on the actual doing deals. But this guy's making all this money doing deals. So one of the guys, like I said, is doing 300 plus deals a year that will be on this acquisitions panel. So if you're looking to learn how to acquire properties and all the little tricks and systems that people use to acquire properties, that middle day and just for that 1 hour will be jam-packed full of a ton of content and a ton of ideas of how they're doing it. Really what's the secret sauce of acquiring properties, and I'm really excited about that. So the rest of it I'll just leave for other podcasts, but if you haven't been a part of a good real estate mastermind or a good mastermind that helps you, I highly recommend the Good Success Mastermind. It's ours, so why wouldn't I recommend it? Yeah. I really believe in it. But at the end of the day, it really is about having good success. So a lot of people in the mastermind, for instance, have been in real estate, and that's great, but now they're finding out that they're making money in a whole lot of other areas. And I believe that is the key to success, is never thinking that you know it all, and never thinking that we even talking to Ryan here this morning, he started doing fix and flip, then kind of moved to doing other things. And that's kind of like a visionary's secret power, but it's also kind of like, the shiny object that we've got to figure out how to control and be under wraps. However, I believe that God made us all to be creators, because I think God made us in his image, and if God has created us and created the earth, we all should be constantly creating new things. So I think that's part of the reason why we are the way we are. So if you're one of those people, you're trying to figure out how to have a community, those top 5, those top key people in your life that you can call and bounce off ideas to, I highly recommend being a part of the Good Success Mastermind.
Yep. And one more time, to learn more about it, just go to goodsuccess.com/mastermind. Make sure to fill out the application, and we'll be in touch. And then the Community Go-Giver events, June 26, 27, and 28. It's going to be an awesome event. 80 tickets available. We had John Morey on the show. We recorded the show yesterday, but the show is already aired. He's already got his ticket. He'll be there, and it's going to be an awesome event. A lot of great speakers that are going to be there. It's happening in the office here in Gary, Indiana, talking about being a community go-giver. So, Tom, let's talk about this a little bit. Just a brief synopsis.
So I am just going to talk right now about the 2 days of bus tour. So we're going to do 3 days. The first day is going to be full content, just a ton of education and a ton of really good national speakers that we have that are going to be here. I'm also going to talk about my vision for flipping the entire city of Gary that day, and I've got some secret things that are going to be coming out soon of people that are going to be here for that, which I'm really excited about. But the second 2 days, we're only going to go till noon. So it's going to be like a 9 a.m. to noon. Most conferences go a little longer than that, but this is going to be fun. The conferences are only going to go to noon, and then from noon till about 4 or 5 o'clock, we're going to go on bus tours and actually look at active projects that we're doing right now. So there'll be maybe some fix and flips. More than likely, we're going to probably show a lot of turnkeys on that first day in B-class neighborhoods where you can buy a property all in for, say, like $100,000 and it's renting for $1,250 or $1,300 a month. And then on this last day, is we're going to be going all to Gary, Indiana properties. So those properties we are looking at like $50,000-$55,000, and they're renting anywhere from like $750 to $950. Just amazing numbers that you can get in an area that has had like thousands and thousands of new jobs being announced in the last 8 months. So it's really exciting to be in different locations of the country at different times in history. And right now I think we're poised to be able to have this Gary, Indiana area really kind of change course.
Yeah, it's going to be awesome. So you guys aren't going to want to miss that. CommunityGoGiver.com. Pick up your tickets, but we are selling out at 80 seats, so make sure you do not pass up that opportunity. And if you're following us on our social platforms, pretty soon we're going to be putting out a promo code. So don't miss out on that. It's going to give you 30% off, but unless you want to unveil it right now, they got to
go to the social media platforms. Yeah. We're teasing you guys. You got to go to the other places to get those promo codes. But honestly, even if you didn't get the promo code, it's still worth it to go, guys. So just go to CommunityGoGiver.com and purchase your tickets today. I think you can get 2 tickets for $700 or $697. So seriously, we're not making money on this. This is not to make money. We're only just trying to recoup our costs on the week.
Yeah, absolutely. So make sure you guys go pick up your tickets. Not right now because we're about to jump into the podcast interview, but after the show. So let's jump on into the podcast interview. I'm excited to have Ryan on the show here. Ryan, for the people that don't know who you are, do us a favor and introduce yourself. So who you are, what you do, and how long you've been doing all that.
Yeah, my name's Ryan Wright. Got into real estate. Fortunately, I was I say kind of forced into the family business, I guess you could call it. My grandpa flipped properties in Southern California before it was even popular. He was an HVAC contractor. My dad was a rental guy. He did plexes and that type of stuff. So I kind of grew up doing those things. But I've been a real estate agent. I've done lending. We do short-term lending. We do software, all kinds of different stuff. So I love real estate. I love transformations. I love creation, seeing what things can become. And just a little bit about me. 2 little boys, happily married, 19 years coming up here in August. And so, just a lot of great stuff going on, guys.
Man, that's good to hear. So let's go ahead and jump on into a little bit about how you got started into real estate. So I know that you said you're a real estate agent kind of in the start, and then you did fix and flipping. So let's talk about that. So how did you get into it? Why did you even I know that you mentioned your family did it before, but why go full time into it?
Yeah, absolutely. So, I mean, my family really didn't do a lot of flipping. So my dad was a chiropractor. And I remember he taught us at the kitchen table about cash flow, and he taught us about passive income, and he taught us about, getting out of the rat race and those types of things. And so those were things I learned at a very young age. And so I watched my father, he'd buy a fourplex, and he was a chiropractor, and he had his day job doing that. And then he'd buy a fourplex, and in the summers, I'd be fixing it up or, and turning a fourplex into a sixplex or whatever the case is. My grandfather prior to that was an HVAC contractor. And just as he had crews, and as they had extra time, he'd pick up a property, maybe move into it and live there for a few years and sell it on a tax-free exchange, or, maybe just buy it as a side property. So like real estate's in the blood. Right. Yeah. So, but with that, I wasn't really like pushed to, hey, go do real estate, go do real estate. It was, it was more, my dad was a doctor, that type of stuff. So, but basically when I got out of high school, I knew that real estate was important. So I was doing some loans for traditional people who are buying houses for themselves. And I went to real estate school, and that's kind of where the journey began. I didn't jump right into flipping. I was too scared to jump right into flipping, which is kind of part of my story that's very unique. I'm kind of risk adverse. I don't like taking, big risks. A lot of entrepreneurs like, hey, just bet it all and see what happens. I'm kind of the guy that's risk adverse. I don't like to take on a lot of risk. And so getting into flipping properties took several years.
Interesting. So talk about that a little bit. So go deeper into that story. What'd you learn from your fix and flipping?
I love that because, it's funny. For decades, you go to financial advisors, and the financial advisors say go to mutual funds, or if you want to be less risk averse, go to bonds, and then get into stocks, and maybe if you want to do some other stuff. That's the only way you can play the game. And then they put real estate way over here for all the crazy whack jobs, and they say, real estate's the riskiest thing you can do. And maybe fixing and flipping is. Honestly, I really believe fixing and flipping is one of the most risky things that you can do unless you really have the knowledge and you really have the team and really have the network. I mean, we've done hundreds and hundreds and hundreds of deals, and still the ones that we end up losing money on when we do lose money are fix and flips, it seems like every single time. But at the end of the day, like if you really know how to use real estate and if you can leverage it as a long-term rental or as a cash flow type of scenario, in my opinion, it turns the whole risk curve upside down, and it's actually way less risky than the traditional methods of investing.
Yeah, absolutely.
Yeah, I mean, Tom, I'm with you on that. I mean, we look at things of investing versus speculation.
Right.
So a lot of fix and flippers are speculators. They're not investors. And the difference for me, meaning a speculation, a land deal is really speculation. You're speculating that land's going to turn into a higher or best use and that type of stuff. Same with fix and flippers. We see a lot of fix and flippers that find the highest priced property they can possibly find, and they say, my house is going to sell for that one. I look at that more as speculation. Investing, on the other hand, we feel like we're taking and mitigating that risk. So when we're being investors, we're below the FHA price range, so it's going to resell for FHA. We have 3 active homes and 3 sold homes, possibly 4 on the exact same street that just recently sold. We make sure that we know our project management. We've got project management in place. We've got contractors in place, and the rehab is $50,000 on average. So you're not getting too far. You already know what you're getting yourself into. So what we try and do is take away the speculation of the investing and make it more of an investing rather than a speculation. And if it's questionable, you pass on it. That's the type of thing that you want to do. But don't get me wrong. I believe in long-term holds. I own a lot of them. I own some commercial properties. I own lots of single-family houses. I also invest in fix and flips, doing them myself. And I also invest in loans. That's kind of the core of the company, where we help people do those types of deals as well. So anyway, I'm on the same page with you, but I do think there's a huge distinction between speculating and investing. And we have, some people come to us wanting speculative lending because we're a hard money lender, short-term lender, that type of stuff. But the reality is we're not speculators as a lender. We're not going to take that high risk, but we are willing to take on risk as long as we feel like it's a good investment.
Hey guys, we're going to take a quick break from the podcast and say a huge thank you to our sponsor, Jerry Padilla, a senior loan originator with Prime Lending. And whether you're a first-time homebuyer or you're well-versed in the process, buying or refinancing a home can be an exciting and rewarding experience with Prime Lending. Serving you in every state, they take the time to listen and they'll work with you to find a home loan that fits your needs. With the mortgage refinancing, lower your interest rate, lower your monthly payments, shorten your term, or get the cash for whatever you need. Prime Lending also has several options for renovation loans so that you can find what works best for you in your home project. Make sure to contact our good friend and Good Success Mastermind member, Jerry Padilla, who is a senior loan originator with Prime Lending and has over 11 years of experience in the mortgage industry. You can learn more about Prime Lending and what they have to offer by contacting Jerry Padilla at goodsuccess.com/prime lending. So make sure you take advantage of that to learn more about them. Now, without further ado, let's get back to the show.
Absolutely. And I love that you said that, because a lot of people miss that. I mean, so there's a difference between speculating and just expecting a return versus actually investing. And normally it's a longer term. So like even the IRS code kind of helps define this. Like if you own something for longer than a year, it's more of an investment and it's passive income versus a quick, like a wholesale deal. It's all speculating. I mean, and basically all you're doing is you're going out and trying to figure out what you think you're going to be able to sell the property for, and you're trading. So it's a difference between an investor and a trader is kind of what I always say. And a trader, like in the stock market, where they're going to trade commodities and trade in and out of something, versus somebody that's going to hold a stock for a long period of time and be able to make money from the long-term perspective without their time.
Mm-hmm. Yeah, great point. To answer Josh's question, he brought up on that how I did that first deal. I mean, one of the big concerns. So I made my girlfriend at the time go to real estate school with me, and I eventually married her. I started just being a real estate agent. And you don't have to be an agent to be an investor or buy properties, but that was kind of the path for me. So we were doing loans. I was helping people get a loan. My wife was showing them properties, that type of thing. And then from there, we started buying our own rental properties. So I knew the path to success was owning long-term real estate. And so I bought plexes, kind of followed in my dad's journey, but I bought them early. I bought my first one when I was 19 or 20 years old. I bought my first duplex, turned it into a threeplex, and kind of improved that property from there. And then from there, I just continued to be a real estate agent. And then, we started getting more into buying our own properties. And then we started getting into fix and flipping. And we were too scared to do it ourselves. And so we would go find the property, and then we'd find an investor, and we'd make them buy it with us and sell it with us. So we made commissions on both sides, and then they would fix up the property and resell it. And one day my wife found a property, and she's like, I found another deal. Fantastic. Yeah. Who's going to be the investor on that? We are. And I'm like, are you kidding me? We are? No, I can't do that. And I remember being sick to my stomach, like standing in the kitchen on the day that our due diligence went hard, and sitting there saying, I don't know if I can do this. And my wife gave me a pep talk. Like, what's the worst thing that's going to happen? What's the worst thing that can happen here? Which is actually a good life lesson. Like, what's the worst case scenario? Because the worst case scenario usually isn't there, and the best case scenario is usually never there. It's usually somewhere in the middle. But the devil you don't know is usually more scary than the one you do. And so we did the deal. And through that process, I learned how hard it was to get money, and how hard it was to get people to think, and look at the deals and all that type of stuff. And so we went on flipping properties, and that started this whole creation of the short-term lending and those types of things, which took me on an additional path.
Yeah, absolutely. I love that. So what are some things, you skimmed over it a little bit, but what are some things that you learned in that fix and flipping? So maybe your first couple of years that you could pass on to somebody that's getting into fix and flipping.
Yeah, the biggest thing that I learned in that is the difficulties of finding capital was so hard. We thought it was going to be really easy to find good capital that would believe in us and know. So they'd say, hey, I'm sorry, I can't do this deal because it's on the west side of the tracks, or there was a shooting there, in that area last night or something like that. And so then they pull out, and it was the last minute. And so arranging for that capital and having a good capital partner was a difficult thing. The other thing is just understanding the emotions anytime you're making a big change in your life, whether that's trying to lose weight or whether that's trying to, get married or whatever the case is. Like, you have to take some steps into the darkness before you see the light. And you shouldn't be stupid about that. Like, you should take some calculated risks, and you should know what some of those worst case scenarios are, but you are going to have to take a step into the darkness before you see the light. And people keep thinking, the more you do, the less you'll have to do that. But the reality is the more you have to do that, because as you're growing that company or you're doing those things, we just made the Inc. 5000 list for the first time this year. Like, we're stepping out in the darkness a little bit more. We're trying to be calculated. We're going to change this, we're going to do that, but those steps become bigger. And so learning how to do that, it's basically how much discomfort can I comfortably live with? Because it's a yin and a yang there. As far as the real estate side, to be very specific on that, getting good values, overvaluing property is the mistake I see so many investors making time and time again. Overvaluing properties is mistake number one. Underestimating repairs is mistake number two. And if you combine both of those, you can get yourself in trouble. So if somebody comes and says, hey, I think this property's worth $150,000, but it's really only worth $125,000, and then they think the repair's only $25,000 and that repair's really $50,000, you're upside down. There's no profit in this thing. So that's mistake number two. Mistake number three is not knowing all the costs associated with it. No offense to all these TV shows you watch out there, which we love. We've got it going in our cafe all day long. We're watching because we think they're awesome. But they say, bought it for $100, put $25 into it, sold it for $150, and made $25,000. That math don't work. That it just doesn't work. And so then it's like, oh yeah, they made $25,000. No, they maybe made $8,000, maybe $5,000. You got an agent, you got holding costs. Did you see it snow? Somebody plowed it. There's all these additional costs that people don't think about. And so that's the other mistakes I'd say we see quite frequently.
I love all that. I think that's all dead on. So along the same lines then, you came out with this find, fund, flip system. So tell us a little bit about that and what the purpose of that is.
I have like a soft spot in my heart for new investors. It's just, I remember the guy that did this property I'm talking about, that was probably 15 years ago, maybe 16 years ago. I can't remember, on Lamar Street, that first one that my wife found, and she's like, we're going to do it. There's a guy by the name of Dan. He funded that deal for me, and I will forever be indebted to him for taking a chance on me on that first deal. It literally changed the course of my life. If you want to talk about life-changing events, that was it. That guy took a chance on me. And I love being able to do that same thing. So we can help people if they're just getting started or even if they're seasoned all the way through there. But the find, fund, flip system is to identify and help with the key problems that new or ascending real estate investors have. And that is finding good deals. So we have what's called the Investor's Edge software that helps find good deals, off-market properties. You can do direct mail, you can do skip traces, you can do voice broadcasts, do all that type of stuff. So we find deals with people that are in bankruptcy or divorce or whatever the case is. We've got that system there where you're connected to the MLS, you're connected to all the tax data. So that's part of the find, fund, flip system. We also created a software where we can help value the repairs. So you can put in all the repairs and really simple, I'm doing a bathroom, economy, and then it'll say, hey, it's going to cost you $7,000 to do that. We're trying to take the guesswork out. Back to Tom's point on the whole speculation versus investing. These types of things help swing the pendulum over to investing better than speculation in what would be considered more of a higher risk type environment. So we've got that type of stuff. And then and then from there, we've got what's called a next deal blueprint, where we help somebody, find their next deal in 90 days or less. And it gives weekly exactly what to do to get the deal. So we have that type of stuff in addition to project managers and, help with get the scope of the repairs. And so we kind of just have an ecosystem that can help somebody, go through this process, because it takes a lot of work. And, HGTV, makes it look really easy. And real estate investing isn't easy. It's simple, but it's not easy. The simple, find a property, improve it, sell it, find a property, improve it, put some renters in there. That it's simple, but it's not easy. It takes work. It takes time. It takes focus. You're going to have deals that don't go the way you want. So.
Yeah, it's really interesting. So, I always say that there's two ways to make money in this world. Number one is to add value to people's life, and number two is rip them off. And it sounds to me like, and I don't even know you that well, so excuse me if this is from ignorance, but from just listening to you talk, your whole product is really to help fund people. But what you're trying to do is help other people take the fear out of what they're doing. And at the same end, you said that part of the biggest problems that you have in the whole thing that you do for real estate has nothing to do with real estate, which is what I always say. Mm-hmm. It's not about real estate. Real estate is just a vehicle or just a tool or just the widget that we sell. It's just what we do. It's not really what makes you successful. And what really makes you successful at the end of the day is trying to take away those fears. Because there's only three things that keep people from success. Number one is laziness, which you just don't do anything, you're not going to get anywhere. Number two is pride, because we think we know it all. And number three, what gets a lot of people stuck, is fear. And what you're doing, because of part of your own personal experience, you probably thought, hey, I wish when I was going through this, I had a system like this that would have helped me, or a lender. I had a lender, and that was great. And I appreciate the fact that he helped me through this, and he loaned me the money and he believed in me, which is something we should be thankful for, by the way, when people believe in us, mm-hmm. and we should remember that. But what I really wish I would have had is this system to help me overcome the fear. And then you're also actually giving a benefit to the lenders as well. If the lenders had your system, they would also be able to let go of the fear of loaning their money, because they would be able to know, have knowledge in the actual deal. So I think that's awesome. And not only that, you're trying to add value to the people that you're loaning money to by offering them these systems.
Yeah, that's exactly right. I mean, it really started back in 2008 when that crash happened. We had lots of money on the streets. But before 2008, if you called our phone number, it would say, hey, go online, do an application, pay for an appraisal and an evaluation, and then we'll call you. Because our phone rang off the hook prior to that. Everybody would call and they'd say, hey, I want to borrow money. Will you lend money to me? Well, yeah, tell me, answer a couple questions. Are you in the middle of a bankruptcy? Do you have felonies? Based upon that, okay, yeah, we'll lend to you then. Okay, great, I'll call you back. And they'd never call us back. And our phones rang off the hooks with people that were excited about it, but never did anything. So we ended up taking our phones down and said, hey, go to the website and fill this out. Well, after 2008, we were doing a SWOT analysis, strengths, weaknesses, threats, trends. And we said, what's one of our biggest strengths? And we said, our phone rings off the hook. We get hundreds of calls a day and we have nothing to do with them. And so after 2008, we started developing tools and resources and software that could help these people that were saying, I want to get started, get to the next level. And so for us, we do so much from software, tools, systems, and capital, because we believe the ecosystem of all those things is what makes somebody successful. And if we can take somebody through the entire experience journey, then that's really where success lies. And that's what we get juiced up about, is seeing, somebody that's never done a deal before do that first deal is really exciting for us.
Yeah, absolutely. And making sure that they do the deal right is even more important, I think. So that's Yeah, absolutely.
Because like you said, the process is easy.
Yeah.
It's really not a hard process. The hard part is in all the details of actually managing every single step day to day, managing the purchase, managing the rehab, managing the sale of it, and making sure all the little things is where you lose all your money.
Yeah, absolutely. And unfortunately, I mean, we have a few customers that don't like to hear the bad news, like we're going to keep you from hurting yourself. We're going to keep you from making a bad choice. That's part of what our job is to give you, the correct information, whether you like it or not is a decision you have to make. But sometimes it's easy. This is probably something for new investors as well. It's easy to fall in love with a deal. And that's one of the things I say all the time. Don't fall in love with the deal. Fall in love with the process. Don't fall in love with a deal, because deals come and go. And so many times people have already planned their trip to Disneyland and bought their tickets and they haven't even closed on the deal yet. And then values come back half of what they thought. And then they're emotionally distraught. And it's like, don't fall in love with the deal. It's never over till it's over. The loan doesn't close until money's wired, and you don't have a check until it's in your bank account. So don't overlive your circumstances.
Yeah, that's why I like what you got here, because I personally not dealt with the system that you set up, but with systems and processes that pulls that emotional decision out of it, like you're saying here, which ultimately could save your butt in the long run. So that's absolutely true. So kind of going along the lines of a little bit of what we've been talking about, which is money. So tell us a little bit about dohardmoney.com. I'm very interested to hear what you guys got going on and how you can actually help people that may be listening to the show here.
Yeah, absolutely. I call ourselves the last of the true hard money lenders. Hard money isn't meant to be hard. Hard money was meant to be lent upon the hard asset. So you kind of have your soft assets, your hard assets. Your soft assets are going to be your credit, your background. You're going to have your income, how much money you make, your job history, all that type of stuff is kind of the soft assets. And that's how a traditional lender looks at things. They say, hey, this guy's had a good job. He's had it for a long time, makes a lot of money, those types of things. A hard money lender says, what is the property worth? And how much am I going to be into that property? And they use the equity in the property as their collateral. So we do something very, very, very unique. We'll lend up to a 70% of the after repaired value of the property. And there are some deductions if there's crime or if there's railroad tracks, or, there can be deductions to 65 or 60, depending upon the situation. We have a software that tells you all that, asks you the questions and says this is where it's at. We can go up to 70%. And we'll do, but what makes us unique is we'll fund the purchase, the rehab, the closing costs, 5 months worth of payments, all. If that all fits under the 70%, we'll fund all of that. Anything that exceeds that, you would bring to the table. So if you can find a screaming deal, if you can find a really good deal, we could fund everything, your purchase, your rehab, your closing costs, where there's not cash to come to the table. If you find something that exceeds that 70%, then you'd have to bring that difference. So it really allows people getting started, getting in the game, to get into deals without having to put 10, 20% down. In addition to that, we're not looking for people with perfect credit. We want to make sure you're not in the middle of a bankruptcy. We want to make sure you don't have judgments or charge-offs. But beyond those types of things, credit score is not an issue for us. We may price the loan differently based upon credit, but it's not a go, no-go, qualify, unqualified type situation. So that's the types of things we're doing for new investors. And we've got some other programs for aspiring or successful investors, but that's kind of our most popular.
So, and are all of your deals short term then, like 1 year or less?
Yeah, most of the stuff we do, we can write stuff to 3 to 5 years. You're going to be putting 20% down and making your monthly payments and that type of stuff. Less costs, but most of the stuff we do is short-term deals, either to buy, fix up, and resell, or buy, fix up, and then refinance into a rental type situation and put somebody in there. So, I mean, with our program, if you buy a property and fix it up and get everything under that, where you're coming up with a little cash to close, you can do a rate and term refi. Some of those types of things as well can work out really well, either with us, or you may have a bank or relationship that can do that as well.
Absolutely.
And then where are you guys lending right now?
So we're in 34 states. If you go to our website, you can look at that. But yeah, we're all over the country, mostly in the West, mostly in the East, some in the Midwest, and a little bit in the West.
So this may not be a question that you get asked too often on podcasts, but for my audience, I know there's going to be about half of my audience that just liked what you just said and maybe interested in possibly getting a loan from you. But then I have half my audience that would probably be interested in possibly working with you on the other side of actually you guys acquiring capital. So you guys working with a fund that your other investors invest into, or are you guys just working with bank money, or like, I guess, how do you get the money to fund the deal?
Oh yeah, no, I'm happy to talk about it. No problem. So most of our I shouldn't say, a lot of our capital is private individuals. So we have private individuals with cash. They come to us. And so we have a unique platform. If they're interested in that, they can go to our website. It's like become a lender or invest with us or something like that. They can look at that, and we can talk to them. We also do have hedge funds that we're working with. We have billion-dollar hedge funds that have capital allocated. But the interesting thing is those hedge funds and that type of stuff, they basically are all writing the same types of loans. They want 20% down. They want good credit. They want experience. So if you're in that market, if you've got 20% down, you've got good credit, you've got experience, there's a lot of options out there. And we can get really good terms on that type of stuff. If you don't have those, that's where we get into most of our private investors or a few of our hedge funds that are offering alternative stuff to that. And that's really what I call what the hedge funds are doing. I really don't call that hard money, right? That's kind of an in between.
It's like soft money, yeah.
Soft money, yeah. What we really do is the hard money side of that. So yeah, on either side, we could help those guys out if you're interested in getting some capital, or if they're interested in.
So you deploy people's capital, or do you have a fund that they invest in?
No, we deploy people's capital.
Okay, gotcha. So you're basically a broker.
Yeah, we can be. Yeah, okay. In situations. I mean, we have arrangements with all where we're direct lender, broker, and where we're using hedge fund money.
Perfect. Okay, cool.
So then for the people that may be listening that want to come to you to get funding, maybe a little bit of a novice question, but what do you as the hard money lender want the investor to bring to you with the deal? Like what do they need to present when they're applying to try to get the hard money loan?
Yeah, it depends on one of two paths. If they have experience, it would be different than they don't have experience. What we found over the years is if you've never done a deal before, we really want you to come to us before you have a deal so we can help you make sure you're finding the right deals, you're structuring the deals, you're writing the contract. So we have a system put together to help you go through that. So if you haven't done this before, we want you to come to us before you find that property, because 9 times out of 10, when you bring us that property, it doesn't work. So our system, our find, fund, flip system helps you make sure you get your ducks in a row so you're bringing deals we can actually fund on. So that's if you're new, we want to talk to you when you're just saying, I'm interested, I want to do that. We want to talk to you then so we can set you up for success. If you have experience and you're coming to us, we want to see a contractor's bid. So we want a purchase contract. We want a contractor's bid. We want the purchase contract to be the name of an LLC because we're only lending to entities. We want to make sure we have access to the property so we can get in the property and evaluate it or value it or inspect it and that type of stuff. And then eventually we're going to pull a credit just to make sure you don't have judgments, background problems, that type of stuff. But that's really to begin with. We just need a contractor's bid, a purchase contract, and make sure it's on the name of an LLC, and enough time that we can get values done on the property and get inside of it, access to the property.
Interesting. So then kind of switching tracks a little bit, let's go more towards Ryan's experience. So his experience in the real estate world. So
absolutely.
What are some of the biggest mistakes or the biggest pitfalls that you've seen real estate investors make, whether it's on the rental side, the fix and flips, the maybe they are hard money lenders or they're looking for hard money? Like, what are some of the biggest mistakes you've seen?
So mistakes I've made or mistakes I've seen other people make?
Either one's good.
What you've made.
I'm with that. I mean, I look at mistakes in terms of dollars. So like, what's my biggest, worst deals that I've done? I'll tell you, the worst real estate deal I ever did was a property that I broke my number one rule, which is don't fall in love with a property, fall in love with the process. And my wife and I, we owned a house and we were looking to buy another house. We were thinking we were going to move into it. So we fell in love with a neighborhood and we went around and we found a property and we ended up buying that property and said, hey, we're not going to move into it now. We're going to rent it. So we were negative cash flowing $500 or $700 a month on this property. So not a good decision, right? Yeah, Tom's shaking his head. So we say, oh, okay, no big deal. We'll do that. Well, and then what happened is in the area, the values started to go down and we said, no, okay, well, we'll wait this one out. there's this little thing called sunk cost bias, which is the idea of not being able to walk away from the money you've already sunk into a deal. So we had this sunk cost bias, and so we said, well, we could sell the property and lose $25,000, and we're feeding it $700 or $800 a month. We ended up not moving into the property, and we said, no, we'll just hold out and wait. So we kept feeding the beast and that type of stuff. Well, anyway, 4 years later, I don't remember the details. My wife can tell you all the dates. I don't think in that terms. We ended up losing close to $100,000 when we sold the property. And, we fell in love with the deal. We thought we were going to move into it. We ended up buying another house somewhere else and found a better deal. We fell in love with the neighborhood. Now, that's not to say if you own a house and you're going to upgrade or do some of that and keep that house as a rental, that might be a good idea. It might also be a good idea to cash it out, get your tax-free money, cash it out, get your tax-free money, move on as well. I mean, that may be it. Depends on the property, but not every property is a good rental property. If you fall in love with a deal, that's probably one of my worst deals. I've lost money lending money. I've lost money in rehabs. I've lost money on some rental properties. I mean, it's going to happen. I think that losing money is part of the process, and you have to look at it as the overall, and that may scare some people, but it's part of the learning curve, right? It's part of the education. It's part of investing. If you look at people that are investing in what are they called? New startups and that type of stuff. 80% of the time, they're wrong. They're betting on 20%. They're planning on losing 80% of the deals they actually invest in, but they're planning on their 20% hitting it big. I'm not suggesting that's the case in real estate, but part of that's the case. I might lose on 10 or 20% of the deals, but I'm going to make it on 80% of the deals that I do. And as a whole, I'm going to be a greater return. But I can't fall in love with that one deal or that one loss or that one problem, because I've got to look at it as holistic and like a venture capital firm would. That's what I'd probably say. Does that help, Josh?
Yeah, no, absolutely. So don't fall in love with the deal. Fall in love with the process is what we're getting out of this whole show. So.
and wait a minute. Let's go back to Michael Zuber.
Okay,
So we had Michael Zuber on this show.
Yeah.
And what was his number one rule? Don't buy what kind of house, Josh? No alligator houses.
Oh, no alligator.
Okay,
So
what does that mean?
No
alligator houses, which basically means negative cash flow never works.
Oh, geez.
It never works.
Yeah.
If it's your own personal residence that you're living in, that's a whole different story, because that's not an investment. And if you think it's an investment, you're absolutely wrong, and don't even get me started. However, negative cash flow never works. Positive cash flow doesn't even always work, but most of the time, like I think the percentage of negative cash flow that works is probably only 20%. So it can work, but I'm telling you, you're going to only win about 20% of the time. However, I think if you're on positive cash flow, if you're buying that single family resident, you're making $200 a month, $250 a month. Gosh, some of our deals that we've done have been $300 or $400 or $500 a month. Like the percentage of time that you're going to win over the long haul, 10, 20 years, is going to be like 95, 99% of the time. And just like you said, you're still going to have those losers. You're still going to have something that happens that you're just completely out of the blue that you don't really know about. But that's okay if you have enough. If you have enough deals. If you're banking on that one deal, that's not a good deal either. You've got to get to the point where you have enough deals and you're looking at this in a much larger snapshot. That way you can actually determine if it's a good deal or not. So don't look at one deal and say, I made $100,000. I'm God's gift to real estate. And obviously you're not looking at that one deal that you lost $100,000 thinking you're the worst thing that's ever happened to real estate either. You've got to have that larger snapshot. So don't buy alligator houses, positive cash flow. And I have houses for you in the Midwest that positive cash flow if you need help. Gosh,
well, and it's kind of back to the speculation versus investing we talked about earlier.
Yeah.
The negative cash flow puts you in a speculative position. A positive cash flow puts you in an investor position. So you asked for mistakes. I mean, I gave you a doozy.
that was pretty good. That was a pretty good mistake.
How
right?
I lost $100,000.
There it is. That's the title of the episode.
Don't name the show that.
Yep, that's the name of the show, How I Lost $100,000 in Real Estate.
You want more detail?
Yeah. That's a clickbait title.
Yeah,
exactly. All right, cool. Well, we appreciate everything you shared so far. We're going to have to start wrapping this up, though. We got two final questions, Ryan, that we're going to ask you. We ask every single person that we get on the show. Excited to hear what you have to say. And plus, because of the fact that he doesn't know us very well.
So I love to hear what new people have to say.
Yeah. So good success to us means a lot. It comes from the Bible. Joshua 1:8 talks about the quality of success, and that's what we're really focused on. It's a mantra of good success. So for you, maybe it was the first time that you heard about us when you were getting the recording scheduled to be on our show. What was the first thing that came to your mind? To you, what does good success mean to you, that term?
I don't think all success is created equal. I think that's really, I believe in this mantra of like this good, better, and best, right? So there's good, there's better, there's best, that type of stuff. So I think when it comes to good success, the first thing that came to my mind is this is a cool name, first off. The second thing that came to me is that it made me start thinking that all success is not created equal. And maybe on a spiritual element of that is like no success is going to compensate for failure in the home. So it doesn't really matter what successes you have in business or you have, if your personal life's jacked up, if you don't have a great relationship with your kids or your spouse or whatever means something to you, whatever that is, that it's really not worth it. So I would like to think that your title or your name implies a holistic view of what's really most important.
Yeah,
yes,
100%.
The right kind of success.
So I want to repeat something he said. So no success is going to compensate for failure in the home. So guys, think about it. That's absolutely huge. So love that answer. So then the last thing here is you got to leave the audience with one thing. So maybe it's a quote, a thought, piece of advice. Maybe it's a book that you've read that you want to share. One thing you got to leave the audience with. What would that be?
I got it. Okay, I might botch this little. This is a poem, and it's long, but I'm going to do this. Okay. Somebody said it couldn't be done, but with a chuckle replied that maybe it couldn't, but he wouldn't be one to say so until he tried. So he buckled right in with a bit of a grin on his face. If there's fear, he hit it. And he started to sing as he tackled the thing that couldn't be done, and he did it. Now, there's thousands to say that it couldn't be done, and there's thousands to prophesy failure. There'll be thousands to point out one by one the adversity that waits to assail you. But if you buckle right in with a bit of a grin on your face, if there's fear, just hide it and start to sing as you tackle the thing that couldn't be done, and you'll do it.
Boom.
Mic drop. Man, you did not butcher it at all. If you did, then we didn't know.
I did,
awesome.
but I kind of substituted.
I love it. That was awesome. Yeah, thank you so much for sharing that. How many times did you rehearse that before getting on the show?
None. It came back to me.
Awesome.
I learned that poem when I was a kid. And then I've been teaching it to my boys. I got two boys. I got a 9-year-old and a 7-year-old. I've been teaching it to them because I think so much of what's up here is really what's most important.
Absolutely. 100%. Man, thank you so much for everything that you've shared so far. Been an awesome episode. Ryan, thank you so much for being on. We look forward to having you back again soon. But before we let you go, if somebody wanted to get in contact with you, I know you got a couple websites. Maybe you want to share your email address, phone number, or whatever. What's the best way for somebody to get in contact with you?
Yeah, absolutely. We got a free gift for your listeners. I've got a book called How to Get More Money Than You Can Ever Handle, a Real Estate Investor's Guide to Funding Deals. It's a great starter guide if you're looking at getting started. It sells on Amazon, Barnes & Noble, all that stuff for $20 or $24. You can get a free digital copy of that for your guys' listeners. So we put up on our website, dohardmoney.com/good-success-podcast. And for your listeners, you can go download that book and get a free copy of that. It's probably the best way, and then you can see what we're all about.
Amazing. Love it. Can you say that website one more time for us?
Yep. So it's dohardmoney, dohardmoney.com/good-success-podcast.
Awesome. And thank you so much for being willing to share that for our audience. Guys, make sure that you take advantage of that. Learn more about Ryan. Learn more about dohardmoney.com and his fix or find fund flip system as well. So you guys are going to make sure that you check all that out. So Ryan, thank you so much for being on the show today. We appreciate you being on and appreciate everything that you shared so far.
Yeah, thank you so much, Ryan.
It's been a great show. So thank you for being on. We look forward to having you back again soon.
My pleasure.
All right, so that's going to do it for today's episode. We appreciate you jumping on and joining us for the Good Success Podcast today. If you haven't already, make sure you have subscribed to the Good Success Podcast or just go download the app from either the Apple App Store or the Google Play Store for Android, and it's just 10 times easier to listen to the podcast that way. It's the official Good Success app, so make sure you get that. And then the Good Success Mastermind, May 14 through 18 in Miami, Florida. It's coming in hot, so make sure that you go check it out, goodsuccess.com/mastermind. Fill out the application there, and then you'll jump on a phone call with us, and hopefully we can get you there. And then the Community Go-Giver event, communitygogiver.com, June 26, 27, 28. Tickets are going to sell out at 80. We can't take any more than that. Fire Marshal says no more because it's happening right here in our office in Gary, Indiana. To learn more about it, go to communitygogiver.com. Pick up your tickets there. Make sure you're following us on our social media accounts because you might come across a promo code for 30% off. You might. we'll see. You just have to follow the accounts and find out yourself. So that's going to do it for today's episode. We appreciate you jumping on and joining us today. Remember to be a conduit, not a bucket.
Work to have to give.
And we'll catch you on the next one.